Good morning, good afternoon, good evening, guys. Wherever you are in the world, welcome back to our channel. On this channel, we educate, teach, and help those who want to gain some knowledge in trading. So, today I want to show you how I caught this massive 316 point trade and how we could have also capitalized on the market structure to catch this massive trade. So, here we are going to start. I want to start on a 4-hour time frame. So let me just take you back, guys, to the 4-hour time frame and show you how I got this massive trade. And I'll just rub it like this. So I'll break it down step by step, what I saw and what made me to catch this massive 316 points trade on US30. This strategy can change your life and can make you make something tangible, something that can be of use to yourself and your life. Yeah. So now we start from the 4-hour time frame. As we can see here, the market has been on an uptrend. It has been making series of higher highs, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and higher high. So if you look at it, for the past 3 days, this market has been on a bullish market. It has been pushing very bullish. So like if you can check it from this point, it pushed very hard in the upward direction, and then like for yesterday, it did not move very much. It just moved a bit, and I would say maybe it consolidated. And okay, let's just say if you look at it in a long run, this market has been bullish. When you look at it on a weekly chart, you can just take a look on the weekly chart and daily chart. You'll see that the market has been on a bullish trend. And one thing that gave me confidence was, if you understand the idea of liquidity, if you check out this type of liquidity that we have here, it's called relative equal highs. Relative equal highs. Others would have wanted to capitalize on this, saying it was a double top, but in actual sense, this is a relative equal high, and on top of this double top, sorry, yeah, on top of this double top lies a lot of liquidity. Liquidity, just like pending orders. This could be stop loss, buy limits, sell limits, buy stop, sell stops. Anything of that kind is considered to be liquidity. So now, in this case, that was our main draw, where, or I would say, one confirmation that told us that the market is likely to push high to take out the liquidity which is lying here. Now that we have our direction, our bias was a bullish. Also looking at the amount of liquidity that is lying at this level, we also want to see what could have given us this reasoning and how we could have taken advantage of it like I did. So in this case, I'm going to jump into the hourly time frame and see if there's something important that we can capitalize on. So now, looking at the hourly time frame, we have already seen that on top there lies liquidity. A lot of it could also be a pool of liquidity. So in this case, we look at what happened in the previous 3 days. We had the market pushing up, pushing down, and what made it push down was to take out liquidity which was lying at the bottom, here. And then from here, it also pushed up, breaking the structure. This side came down, and at this point it started pushing high with a very huge momentum. This momentum is what you should be looking for. And what happened is that yesterday this market just consolidated at this level, consolidated like this. So now we had to start looking for a trade in the early morning or in the early hours of today. So if I take you to 15 minutes, 30 minutes time frame, you would see that at the top part of yesterday, there is liquidity that is lying at this point here. All this is liquidity. So this is what we call slightly equal highs. And then when you look at the bottom part here, this was also liquidity. Yeah, all right. Now looking at the liquidity, the equal highs on top, and then also looking down at the liquidity that is at the bottom, so you can frame your trades. This is a 30 minutes time frame. Now guys, looking at the labels that we have labeled now, the market, it left some equal highs on top, which is liquidity, and on the downs here, if we go in the lower time frame 15 minutes further, now we know and we have the idea that this market is going up. Now how are we going to capitalize on this move? This is what we are currently looking for. Yeah, on the looking at yesterday, the market left liquidity on top here, and then you want to see this liquidity being taken, but also at the bottom when you look at it here, there was liquidity. So the first thing is to know that the market can't just move in one direction like that. It has to also take out the liquidity at the bottom, or maybe to recharge. How is it going to recharge? Is first by taking out the liquidity at the bottom, then push high. Now how are we going to enter in this trade? We drop further down to 5 minutes. In the 5 minutes time frame, you can clearly see that we have an order block at this level. This could be the order block that you would have used. Yeah, so this is the order block that you could have used. So now when the market was in these levels, you knew that it has first to drop down into this level, take out this lower time liquidity, lower time frame liquidity into this order block here, and then push up. So what you could do is to leave a pending order just below this small leg here into this order block. You leave your pending order like this, just below here, and then your stop loss, you could have put it, you could have set your stop loss below this leg here, or if you want for safety, you can put it below this or even further down there. But for me, I prefer taking risks. I prefer having a tight stop loss and taking a sniper entry. So in most cases, I find out that my analysis and my trade is correct, but just because I have a tight stop loss, the market hits me, take me first, and then goes into my direction. It's hectic, it's painful, but in most cases it rewards me, and I like doing that, and I'll always do that. So in this case, you could have put your order like this, your pending order, like this, and then your stop loss just below here. If you want, you could put it here or here, depending on your loss tolerance, how much loss you can endure. But for me, I like tight stop losses, like I have said, and they give me what we call sniper entries. So in this case, your first profit target would have been this high here. Why? Because there is liquidity there, and it would have given you a 1 to 4 risk reward ratio. And then your second profit target would be, if you go in the 4-hour time frame, if you go in the 4-hour time frame, we've already labeled out this liquidity up here. We've already labeled out that liquidity up there, and then I'll just drop back to my 5 minutes. So your second profit target would have been there, and this gives you a 1 to 8 risk reward ratio, which is 301 points. Now depending on how much you're going to tighten your stop loss or something like that, this is exactly what you could have caught. And then let's keep subscribing, let's keep sharing, and please, your support is what will make me make more videos and try to give you insights on my trades that I'll be taking This is one trade that I've capitalized on, and this is my thought process. And if you use this kind of thought process, you are guaranteed to get quality trades. Make sure you put into place the idea of liquidity, order block, and or fair value gaps if you know, and or the idea of the power of 3 if you know it. For today, this is the end of this video, and I thank you very much for being on this channel, and make sure you subscribe. Thank you so much.